And again, I want to push on that thread, the insights that Impacto has from, years of running an accelerator in the region. What are some of the other gaps or peculiarities? What else have you learned about the startups in the region or the economy in the region by running the accelerator?
Yeah, I think there's some unique challenges and opportunities in the Andean region. In some of the smaller markets, and Ecuador is a good example of this. In order for companies to reach a decent scale, they really need to be thinking regionally from the beginning. And that is kind of Ecuador is a really good market for testing out an idea and kind of getting that initial traction and showing that it works, and then taking that and scaling it in other markets. And that requires also the right mindset from entrepreneurs, which I think is part of this cultural evolution that we've talked about. Is that sometimes, in our accelerator program, we talked to companies who would say, "Oh, I want to be the best company in this industry in Ecuador." It's okay, but you need to think regionally, because if you're the best startup in that industry in Ecuador, you're not going to get to the scale that you need to get to. So one of the dynamics in the Andean region are smaller markets. It's generally harder to access capital. There are fewer local funds, and a lot of the regional and global funds are looking at the smaller markets. And so we see a lot of bootstrapped companies and entrepreneurs who are very creative in being able to reach a good level of traction being bootstrapped. And piece of that also comes from this angel investor dynamic that we touched on, where there's not really very well developed angel networks in a lot of the region, and that makes it difficult because pre-seed funding for startups is very hard to come by. There's not a lot of VC funds in Latin America that invest pre-seed, and that usually comes from angels in other regions. But if the angel ecosystem isn't developed or isn't behaving nicely with these kind of broken cap tables that we see, that makes it difficult for startups. So I think kind of challenges, this regional opportunity and need to think regionally, challenges in the access to capital. And also there's, depending on the industry, there can be interesting, regulatory dynamics where if you're playing across a few different countries, you have to deal with different legislation and different regulation, and that can vary a lot. Even in a small region that has a lot of similarities. Whereas a startup that starts in Mexico or Brazil, they can get to a really significant scale staying in one country. And that's definitely something we see different in the Andean region, where you have to be thinking regionally and that thinking about kind of the dynamics between different countries and how you can deal with that.
Yeah, right. It's a unique problem because you have to do compliance, marketing, all in 3 or 4 countries, right? And even though people assume it's Spanish, they are culturally different, right? Like what works marketing in Bogota and Santiago, Chile aren't necessarily the same thing.
Yeah, and that's actually an interesting dynamic that I've talked with a few founders recently about. What you see in Latin America is that a lot of the funds, Brazil tends to be, unfortunately, a little bit separate from Spanish-speaking Latin America in terms of the ecosystem, because of the size of the market, because of the language difference. And so, thinking about Spanish-speaking Latin America, specifically Mexico is the largest market, and also has the most large venture capital number of large venture capital funds of any market. And what you see from a lot of entrepreneurs who want to raise money in Mexico, the funds there will say, well, once you've showed you can have traction in Mexico, then we can have a conversation. And that leads there to be this kind of movement from countries like Ecuador, Peru, Colombia to Mexico. And every startup in Spanish-speaking Latin America is trying to open in Mexico. And Mexico, in addition to being just a different market with different dynamics, is also a more competitive market because of this, because there's all the local startups and there's all the startups from the region who are trying to enter. And we've seen some startups who have struggled, quite a few who have struggled to successfully open Mexico. And it also invites this conversation of, well, why there's pros and cons, but an alternative to going and opening Mexico as your second country is to say, well, if you started in Ecuador, Colombia is a country of 50 million people. Peru is a country of 30 plus million people. You're not at the size of Mexico, but you can kind of open some of the medium-sized markets and have pretty good traction in the region, and maybe have a more solid base before going into Mexico. So these are kind of some of the dynamics that come out of the nature of the size of the countries here.
Yeah, that's really interesting that maybe an Ecuadorian startup that could do very well in Ecuador and Peru doesn't do as well because they're forced to go and open Mexico for funding, but they don't necessarily know how to operate in Mexico. That's interesting.